The real question is whether the new governor and the current government is committed to inflation targeting. Rachel Ziemba, Forecast RG. Some analysts say that India's interest rate is among the highest in the world. Do you think India will lower or raise the interest rate out, and why?
Sure. So India's interest rate is among the middle of a group of higher yielding emerging markets. India's interest rate is only barely positive in real terms, but given strong monsoon and some disinflationary trends, we think they'll have time to cut rates later this year. We don't think that's likely to happen this week in Central Bank Governor Raghu Rajan's last meeting. We think that there will likely be cuts coming likely in the fourth quarter once the inflationary path is complete. A real question will be whether the new governor and the current government is as committed to inflation targeting. We imagine that they'll be a little more flexible in the amount of time it takes to reach the glide path, and that's going to mean a little bit stronger consumption growth, a little higher inflation, and somewhat lower interest rates.
In an effort to encourage public spending, South Korea has kept its interest rate at a record low, 125. The South Korean Monetary Policy Committee will announce a new interest rate on Thursday. Will they keep it unchanged? And did this help stimulate public spending?
Sure. So South Korea is among Asian central banks that's on has an easing bias, is on an easing trajectory. We expect that the central bank will keep its interest rate on hold this week, but will ease further in coming months. Why won't they act now? Because they're waiting to see the effects of past stimulus, which has been credit, fiscal, and monetary stimulus. Also, we think they're waiting to see how the Bank of Japan will respond to some of the recent macro developments. Underlying inflation in South Korea remains low, and they haven't met their inflation target in about 3 years, so we think there's some room to ease. The problem is that South Korean households have a lot of debt, and so cutting interest rates is unlikely to stimulate consumption very much. We think fiscal policy, such as was rolled out in the last couple of weeks, will probably have a more meaningful, if modest, effect on the economy. And we'd expect to see some more there, particularly as we head into the political cycle and choice of the next president.
The New Zealand interest rate is likely to drop on Thursday. All of New Zealand's major banks predict the rate will be dropped by 25 basis points to 2%. Do you agree with this, and why is the government doing this?
Sure. New Zealand is on an easing trajectory. Economic growth has moderated around global growth. We do think that they have space to ease over this trajectory, particularly as the New Zealand dollar has been relatively strong. New Zealand stands out as much better positioned than some peers like Australia in coping with global trends, including the Chinese investment slowdown. Its products are much more leveraged to Chinese consumption, and thus, as a result, it's more able to benefit from agricultural demand. So it's a bit more resilient than peers, but they'll probably use their monetary policy space.
Thank you, Rachel, for speaking with me today. Stay tuned throughout the week for the latest from Dukascopy TV. Goodbye for now.